The current level of external debt of the Philippines is $105.9 billion. There was a huge increase from the level of 2019, that was before the pandemic, and 2020, precisely because of the huge demand for public money to help mitigate the pandemic. Now, with respect to how we're going to assess this, at $105.9 billion, that's about 27% of GDP. Okay? That's about 27% of GDP. Now, if we compute for both interest and principal payments at this point, that would be about 8% relative to exports of goods and services. But I think we also need to look at the national government debt, both external and domestic. And here, we're talking of 11.7 trillion pesos, which is about 60.5% of our GDP. Now, is this sustainable? At this point, even if it has breached the normal metrics of 60% ratio between total national government debt and GDP, I think it's still sustainable. There was only a small breach. I said it is sustainable precisely because for 2021, we've started to grow. And 2023, 2024, the government believes that it will be able to manage a 7 to 9% growth in 2023 and between 6 to 7% in 2023. So that means on the basis of the assumption that there will be no further accumulation of demand on public resources, I think we can grow out of that debt and start reducing it to pre-pandemic levels of about 40%. For the new government to manage the increase in external debt, actually even in terms of the domestic debt, for the last 2 years of the pandemic, the new government ought to, one, do an inventory of all these debts to make sure that everything is accounted for and everything will be considered in the servicing of those debts. Second, to come up with a debt strategy, both domestic and external obligations of the government. Now, a strategy will allow the new government to pursue on a more intentional basis the servicing of these debts and ensuring debt and fiscal sustainability. Because if you have a good plan, the market will be more confident in coming in. And thirdly, to make sure that all levels of government promote and adhere to good governance, to make sure that we avoid in the future any allegation or any action that would remind of corruption in high places. Well, I should say first that the inflation that we saw in 2021 was basically supply-driven. We had problems with the supply of pork. There was this African swine flu. We had problems with fish. There was very little to fish, especially in the West Philippine Sea. Vegetables were in short supply, precisely because of the weather. We had Typhoon Odette. And therefore, monetary policy will always tend to look through this supply-driven kind of inflation. And therefore, you can expect the monetary authorities to simply keep the policy rates steady. And that's what they did in 2020, 2021, for most of, at least for 2021. Now, moving forward, there are certain possible shocks, one of which, of course, is oil prices. Okay? A second is the possibility that you had another upsurge of the virus. Then you will have lockdown on business activities, on personal movement. That could affect inflation as well, because if you're not producing anything, supply will be short, and there will be impact on prices. Okay, so with respect to policy, I think it's important for the central bank to remain agile and cautious on any possible shocks that may be brewing out there in the external markets and even here, especially with respect to supply. Supply-driven inflation cannot necessarily and forever be ignored by the monetary authorities, because if you have problems with supply and it gets entrenched, that can have second-round effects. And second-round effects will affect inflation expectations. Once inflation expectations are affected, gets to the psyche of individuals, and therefore their demand behavior will also be affected. Then monetary policy will have to come in. The government's response to various non-monetary measures will be key to ensuring that inflation remains manageable. What are these measures? Because of short supply of pork, fish, and vegetables, the government has liberalized importation. I think it was a timely decision on the part of the government. We are now importing more than 1.6, 1.7 million metric tons of rice, for example. In the case of swine or pork, we are also importing so much. And fish, that's about 60,000 metric tons. Vegetables as well. So the government policy was to liberalize imports so that whatever short supply we have in the domestic market will be complemented, supported by imports. The so-called MAV, or minimum access volume, was also increased to allow us to import more and mitigate the short supply here in the local markets. A certificate of necessity to import was also issued by the government to make sure that we can import those commodities that may be in short supply, so that we can mitigate inflationary pressures building up. Well, somehow, the government decision for me, to remain indifferent as to the incursion of foreign powers in the West Philippine Sea, based on reports, has affected the access of our local fishermen to the very rich aquatic resources we have in West Philippine Sea. And again, based on the reports, we are seeing this translated into short supply of fish. West Philippine Sea is one of the major sources of fish supply in the markets. The new administration can help tackle the issue of inflation if its commitment to strengthen our ability to produce is implemented. Okay? It is important that our manufacturing and agriculture are robust and resilient to produce the basic commodities that we need, that they will not be in short supply. Second, support should also be given to small business, because small business, micro, small, and medium enterprises actually account for more than 97-98% of the total number of firms in the Philippines. Now, for us to be able to address the issue of inflation as well as employment and economic growth, I think the government should support small business. The more people producing, the more supplies in the market, and we should see prices leveling down. Okay. Thirdly, we should have contestable markets. When we say contestable markets, it means that the economy is competitive, that entry and exit of industries will always be available. And therefore, in this kind of competitive environment, you only see the best. You see the best in industry, you see the best in people producing more and producing efficiently. That will have a very positive impact on inflation.